All right, everybody, welcome back to Trading with Artist and Will. This is going to be the weekly market prep for the week of February 9th. So we're going to first take a look and recap what happened this past week. Then we're going to do some projections and analyzing of what's happening for this upcoming week. And then we will close it off with the few picks that I think will actually have a potential for action for this upcoming week. So let's do a quick recap of what happened. So the biggest thing to note is that we saw a really big sharp decline to start off the week, but then we actually ended up rallying really hard on Friday to close it off. So the interesting thing to note is that SPY is very, very close to its new all-time highs, whereas tech is clearly lagging behind, and a large part of this can be attributed to the SaaS apocalypse, which is going to be from those software stocks like CrowdStrike, Oracle, Snowflake, all these names have just been beaten down really aggressively. But when you compare the QQQ to RSP, which is the equal weight here, RSP is actually making new 52-week highs. This is actually, I think, like a brand new all-time high ever as well. So it shows you that there is a lot of market breadth, and market breadth is actually continuously increasing right now. And this can be confluenced with the fact that the Dow Jones has just recently broke 50,000, and a large contributor of this was actually from companies like Caterpillar and Goldman Sachs. And the other thing to note, other names like consumables and industrials like Costco, for example, are really, really strong right now. And you can look at McDonald's, Walmart, Coca-Cola, all these names are making fresh new highs and are trending up, whereas some of those more risk-on traditional names that we think of in terms of tech are the ones that are lagging from here. And so in terms of market rotations, what we hopefully want to see is inevitably another rotation back into those tech names here in Qs to play some catch-up. But the problem with that is we likely don't know when that will happen yet. And given that this is the second year of the presidential cycle, remember that January and February tend to be very choppy, with March being a little bit better. So in some sense, hopefully towards the end of February and Q1 of 2026 is when we start to see a little bit more favorable action in terms of trending names and names that don't constantly get rotated. And so in terms of this upcoming week, we actually do have CPI on Friday. So that's probably the biggest catalyst for this week. But we also have the unemployment rate as well as unemployment claims coming in before CPI on Friday. But other than that, I am anticipating that we're probably going to see some more choppy action with the divergence between SPY and tech. But I think SPY, what we would love to see is this, because we got another aggressive rebound off of that kind of like daily 50 EMA spot, we are probably expected to see another test of this new all-time high area. The best case scenario, though, is that we'll probably see this range bound with this really, really big range that was drawn from this past week here. And then we eventually, towards the end of February, hopefully we get a pop towards the upside for a more favorable trending market. And of course, the other thing that we need to talk about is Bitcoin and cryptocurrencies. So that bear flag that we've been talking about for a few weeks now has actually ended up playing out. We broke under 84K, and we actually broke under the previous all-time high breakout spot, which was at around 74,000. So you can see off this weekly time frame with this really nice weekly flag in the summer of 2024. Then we get that nice breakout here, get that retest. So we have officially breached under that spot. Honestly, if this spot isn't able to hold, then I'm expecting us to test towards the lower ranges of this flag that was built out back in that summer, and which is going to be around that 55 to 50K range for Bitcoin. For full disclosure, I have started dollar cost averaging into Bitcoin. The first ad was at around 77K. The second ad was at around 67. And now I'm anticipating if we are able to break under 60K, then I'm looking for either 55 or, towards the lower ranges of 50,000 here. Moving on from there, what would be really interesting is we just stay range bound around this spot. And then this happens and stays around here for at least a year until for the cycle of Bitcoin, which is 4 years. Then we start developing some new base around this spot. And then we start testing new highs potentially by like 2027 or 2028. Other than that, let's move on to the names on the focus list for this upcoming week. So I'm going to go from the order of what I expect to happen in terms of moves immediately versus something that might take a little bit more than just 1 week. So the first name is going to be VRT, which is Vertiv Holdings. They are a electric production equipment company, which actually play a really big role in terms of making sure AI and data centers actually stay maintained and they can continue to grow. So in some sense, I feel like the VRT setup here on the weekly time frame is very similar to LRCX before they made its huge run and was able to basically almost triple in terms of stock price here. But I think VRT is developing really well into the earnings candle. So earnings is actually going to be this Wednesday. And I really like this setup because we just recently had a downtrend break and now we are approaching the highs of the base that it's made at around 202, that $200 mental spot. And volume is starting to increase here. So in terms of playing this, I'm anticipating and at least hoping that we will get some type of muted reaction off of earnings. It kind of digests it really well. And then eventually post earnings, we are able to get that kind of base breakout there. So that's what I'm anticipating and wanting to see happen. So in the off chance that it doesn't, right, and we get a huge gap up there, then I'm looking for this to let the dust settle. We get some type of retest going into this 200 spot. And then from there, I'm looking to add into it for the potential next leg up. And what I really like about this is that because earnings will be out of the way here, there's a lot of flexibility in terms of how you want to play this, because then we can start layering on March contracts as well as April contracts to really try to take advantage of this entire leg up that it wants to play out. Because when you measure it, this is actually 101 days, so just shy of around 3 months here of basing. So in that sense, you want to think about it as because of this base that has been consolidating for 3 months, it's a 27% base slash range. It's likely that it wants to move at least 27% or more for that next full leg extension here. But of course, this all depends on how the earning reaction is. If we get a crazy gap down, then I'll be looking to see and trying to grab the dip buys here if we actually get swept near the lows of this, either this downtrend area or even at this 145 spot, which when you go on the weekly, that's kind of the exact base that it had before. So that in itself is a big spot to look out for. It's actually the confluence with the weekly 50 EMA as well. And then the second name is going to be TSM. I think this name, because it just had earnings as well, I think this one will probably be a quicker trade in terms of like the next leg. They actually look really similar to VRT, right? Where we have this base that it just recently broke out of, and now we're kind of structurally consolidating within the next base slash leg up. And I think that this one will probably move in tandem with VRT. So this is exactly what happened on earnings. We got this kind of muted reaction, slight pullback just to the EMAs, we consolidate, and then on Friday with a heavy volume push, we close near the highs of this range again. So in this sense, we are looking for either a clean break past this resistance spot at around 351 to play the long side, or hopefully we get some type of consolidation this week, because CPI is Friday, maybe stocks don't really move that much yet until the data point. So in that sense, we would be looking for inside days, a test of these EMAs as well as to use as a springboard. And that's where we would want to try to catch an entry for this ultimate base breakout that we're trying to take here. So looking for either some type of consolidation, inevitably play that break, obviously can add it to it as well if we're trying to really try to fully take advantage of this move. And then the next name is going to be HD. So this is probably going to be even shorter of a time frame trade since earnings is on February 24th. And I really like this name because the other industrial names slash retail like Costco, Caterpillar, as well as like names like FedEx, like these names are the ones that have been really in theme, especially Caterpillar making fresh new highs here. So I'm anticipating that Home Depot probably wants to play some type of sympathy here. I think this consolidation is nice and can be a really good kind of earnings run up to. We're kind of like flagging here just under this resistance spot at around 390. A break past that 389 spot is exactly where I'm looking for, because if you look in the past price action, that's where we kind of like wicked off really hard back in October of 2025. And now we're trying to we're facing some headwinds here again. So off of this zone at around 390 break, that's where I'd be looking to make a trade. We're looking probably for short-term expiries, so maybe even like February 20th or February 27th contracts for this, because this is definitely something you don't want to hold into earnings. But if we get this break into our earnings run up, that's exactly where we're trying to capitalize on. And then the next name is going to be Abivai. So Abivai is a healthcare company, and I really like this post-earnings reaction here. We ended up gapping down, But when you look at it and zoom out, all it did was actually test this previous breakout spot at around 211 that was made in March of 2025. And from there, we've created this really clean downtrend line that we're kind of compressing against. And then after this earnings candle, we see a lot of pocket volume pivots actually start to develop here. And I like that we sweeped it with high volume, and we're kind of right back at the highs before the earnings catalyst actually happened. So what I'm really looking for is a downtrend break of this. And notice how the EMAs are really structured together, right? So this is a really good example of where the EMAs don't really matter that much, since the price really isn't respecting it, right? Like it's slicing through, it's breaking past, and it's not really a significant price point. So in terms of breaking this downtrend and actually creating momentum, we are looking for price to react very aggressively off the EMA. So we're looking for something like this here, where it actually respects the exponential moving average zones, and then it uses it as like a springboard to propel price back up, make new highs, and continue that uptrend essentially. So we're looking for detachment, I like to call it, off the EMAs from here, and that's that confirmation, especially if we get volume into it, that this downtrend line wants to break here. And the other thing to give this kind of confluence here is if you look at XLV, which is the healthcare sector ETF, we are consolidating and making this very nice 70-day base here. So if you look at the weekly time frame here, this is a lot of weekly consolidations. And so obviously, as you know, the more consolidation candles we get, the more explosive the move will actually be when the breakout actually happens. And so in terms of trading AbiVi, especially since it consists about around 7% of the weight in XLV itself, when we see XLV move with AbiVi, that is the confluence that you're looking for, that this downtrend line break is legitimate, and that we will probably have another continuation off of this. I mean, if you look at the weekly, this is a very nice kind of sweep of the weekly 50, and we actually close above the weekly 9. So in some sense, this tells you that there is a chance for good momentum coming up within the next couple weeks here. And then these next two names are names that I think will take a little bit more time, especially since they have ran a little bit, so it's a little bit extended. But these are names that are relative strength that should be watched for any pullbacks that actually happen. So the first is going to be Honeywell here. This is that post-earnings reaction where we just get this really, really nice run off of earnings. We get like a over 8% move on a stock that has an ADR of around only 1.84%. So very, very strong momentum here. Healthy volume too on this push. So if anything, for this name, I'm looking for some type of pullback to either the daily 9 or even towards this breakout spot, right? So I don't think we'll test this 225 area, just purely because we actually based right above it. So in that sense, this little area where the bottom wicks are the retest of this breakout spot. So if anything, I'm looking for a retest of this upper bound range at around 227, around 227 to 230-ish. That's where I would look to see a pullback to for the next kind of like consolidation zone, and then we finally get that next leg up. And that kind of coincides with what the weekly time frame looks like too. Ideally on this next weekly candle print, the EMAs get popped up close to the 225 area, and then that's where we ideally test, and then we get that next leg up. But the reason why I don't think this move is completely done is because if you measure the whole range here, this is a 16% move, and we've only moved about 8% here. So there's a lot of potential room left up here, and especially when we look at the weekly, healthy volume with lots of pocket pivots kind of like popping here and showing you that this volume is very, very good. This move is well sustained. So looking for pullbacks to play this name and this continuation, especially when this type of choppy market, this name has had phenomenal relative strength. And it's something that you should definitely keep on your watch list. So the last name here is going to be Apple. Apple just recently had earnings, and I think it's actually very extended off of this here, especially when look at the weekly time frame. But this is very interesting because out of all the Mag 7 and large cap stock names here, I think Apple is one of the most underrated ones besides Meta. I think this Apple price action is very telling. It actually managed to break under that previous breakout spot at around 258, but look what happens. We get this really, really nice pivot off the weekly 50 EMA. If we actually turn on the weekly analysis that I've annotated here, you'll see that we get this nice pivot off the weekly 50 EMA, and that's exactly where we kind of pivot. Obviously, this is that earnings candle, and then we get a huge spike in volume this past week here. So if anything, Obviously, like I said, this is one of the names I think will take time to develop, especially since it's a large cap. I want to see some type of retest to like this 270 spot. That's probably where the weekly 9 EMA wants to reside anyways, off the next couple weekly candle prints. But we also just got a EMA crossover, and I think that's the biggest reason why Apple is on my focus list, is because with this EMA crossover, it gives a really good spot to catch potential dips. If we get any type of pullback, we want to see a pullback to the crossover, and that's where we try to take a position, because with this crossover slash clusters, what often happens is that's a really good spot for buyers to come in. And if obviously it's really good risk to reward too, because if we see price close under the EMA crossovers, then it's likely telling you there's a chance of a failed breakout. So very clear, concise risk to reward ratios, because if that spot is managed to be held, then that's a higher low, which means we will likely catch the literally like the bottom for the next leg up in terms of this consolidation. Other than that, that wraps it up for this weekly watch list. Thanks so much for reviewing my watch list with me. Obviously, we've had a crazy week with the markets with the, like, look at SPY here. We reclaimed all the EMAs in one day. So it's just ridiculous the type of market condition we're in right now. But other than that, it's just reminding yourself that in terms of swing trading and being a momentum trader, that means you have to be very quick on your feet. What I've been telling myself recently is that if the stock slash sectors that you're looking at is not moving well, then you're looking in the wrong place. So in that sense, it just means to reevaluate, recenter yourself, and actually be a passive observer of the markets and trade what the markets are giving you rather than what you expect the markets of what they should be doing. Other than that, good luck in the markets, and I'll catch you guys on the next one.